My name is Mike Florin, and I'm the owner of Low Cost Mortgage. Today's your weekly update for, it's the second week of June. It's right around June 11th, June 12th. What day is it today? It's June 14th. This week has flown by. All right, so rates are low. They've come down quite a bit. I'm going to pop open a chart. I want to walk you through this. If you look back a few weeks ago, say 4 or 5 weeks ago, I'm going to draw on this with a little yellow circle. This is movement, but it's fairly stable. A little bit up, a little bit down, and you see these little trends that are happening. Then in the last few weeks, the following happened. Bad data came out. I go into detail. It's a little bit long-winded, so I won't. Rates shot up for 2 days. Then good data comes out, and then they come down heavy for about 4 or 5 days. Then bad data comes out, and then they go up again, almost resetting back to where they were for a few days, and then now right back down again. That's a lot of turmoil. That's instability. And you're seeing those rates bouncing up and down the way that they are because of, I want to call it the data that comes out. Again, we've talked about this quite a few times. And if the data is negative in any sort of capacity, there's going to be an overreaction, like a knee-jerk reaction by the markets. Everybody's a bit conservative on the financial markets, and they want to make sure that they're making money, staying compliant, doing those things. Yet at the same time, they want to beat everyone in rate, which is kind of interesting because on the lending side, we're seeing the same players up at the top of the rate stacks, which means the lowest rates. Now, this week, government back into the mid fives. In fact, last Wednesday, Thursday, we were into the mid fives. And then again, this week, we're into the mid fives. You're going to see it in your email. Okay. So go to lcmloans.com/rates. All the disclaimers and disclosures are there. But I mean, right now you're looking at the search tool itself. I'm showing mid-ish fives on government. But depending on the contract length, if you've got 5 weeks on your contract and you have a pretty clean file, we can use a lender that's 0.25% lower than this. So they end up tipping down into the low fives. And with 1 point, you're like really, really low fives with that other investor. But again, that's not on the search tool. So the search tool itself is showing 5.8-ish, 5.7-ish. It just depends on credit score and whatnot. So we're going to call that middle-ish fives because with a little bit of money, you're solidly below mid fives. And then on conventional mid sixes, then again though too, if you have decent credit or you have a few different things going on, then it's a bit lower. So for example, today I locked two deals, VA, decent credit on both of them, and we locked them both. So one's disabled vet, 5.6 is his rate. He got a credit of 0.25. So he gets a credit of about $1,000 for 5.6. And then his APR was like, his interest rate is 5.625 and the APR was like 5.643 because he's disabled vet. There's no cost associated with it, which is kind of cool. So anyways, rates are low. They're temperamental. And that means that you're going to see rates on this email that I'm sending out, and that could change every 10 or 15 minutes. It could change. Good thing though too is I'm going to pop up a 5-day chart. It came down and then it's pretty stable today. But if you look at the 2-week trend, let me pop up a 2-week chart here. You're seeing 2-3 weeks. It's kind of this downward line. It's not going to keep going down. It's going to hit bottom and bounce back up. The question is when. So with you being a realtor, and that's our target really is realtors. With you guys being realtors and selling houses, you just got to really make sure that you're pushing. Hold on a second. I'll be right back. All right, so that's a VA buyer. He's buying a duplex. We're counting the rentals from the second unit to offset his income, and he could afford it without the rental income, but he's going to buy it because he's got rental income out of the second unit. Very, very squared away individual, actually. It's kind of nice to see that. But yeah, okay, so as realtors, rates are really low right now. You want to make sure you're not over-promising rates because they could come back up tomorrow or the next day. So the deals that we have under contract now, well, we're floating them down today because we have a feeling we're getting kind of close to the bottom, and that's because, let me pop up that 5-day chart again, pop it up over here, and you see it flattening out. Typically, if it comes down and it starts to flatten, and then it flattens that next day. There's a high probability it tends to go up again. So it just kind of depends. So that'll be Monday morning when we see that data. Anyways, my name is Mike Florin. Celebrate the low rates. Go find some deals. There's plenty of deals to be had. We have realtors that we're working with that are still closing 4, 5, or 6 deals a month. I know you guys can do it. All right, have a great day. I'll talk to you later. Bye.